Good morning, everybody. It's Chris from Serene Education with your 4 majors and nuts update for the 27th of November 2013, Wednesday morning, and we have some very important news out today, especially for sterling. We have the second estimate GDP quarter-on-quarter figures for GDP for Great Britain this morning. So at 9:30 GMT. So we've got to be very aware of that. They're expecting expansion from the previous one. And we've seen a full 1% increase from this time last year to up to current date, so which is great. So they're expecting 0.8% today, and let's hope and see if we can get it or higher. It would be even better. What else do we have? We have German consumer climate figures soon at 9 a.m. GMT. We have the German 10-year bond auctions. Then this afternoon we have core durable goods orders, month-on-month unemployment claims, and then the Chicago PMI. And then the crude oil inventories, which comes out on most Wednesday afternoons. And then later this evening, we have retail sales year-on-year figures for the Japanese market. So let's start with the euro against US dollar. Let's have a look and see what's been happening. Let's have a look and see what happened yesterday and see what we could expect for the remainder of the week. So where's price trading this morning? We can see quite clearly a resistance level. Yesterday's bullish engulfing candle after the indecision that we saw the past two current days. We saw hesitation. Price hasn't been able to break the Tuesday-Wednesday high of last week. And this morning on the Asian session, we've seen price rating slightly higher than the 50-period moving average. We've seen this 50-period moving average being tested on a number of occasions, almost a full week of resistance at this level. We have the weekly fib level above us that we need to get above. Get above that, and you can see that we have a lot of clean air. Very little to really stop price from moving high with sentiment. And that'll take us back up to the current highs we've seen here in October recently, and between the weekly and the monthly fib you're looking at 255 pips and change. So nice little profit target there if and when we get to see price closing higher. So daily candle, you can see we were above here not too long ago. Breakout, the pullback candle failed to find support above it, and then we failed to see the continuation because of that. So we had the breakout, a bearish engulfing candle, price pulled back, and then we saw price reverting back towards the monthly fib. Here, breakout, pullback, and then the continuation higher. That's exactly what we want to see, and that's exactly what we expect to see here. We want to see a nice bullish engulfing candle, very little wick to tell us it's true sentiment breaking higher. And you can see that price over a number of months has found this particular point very hard to break. So getting a nice bullish engulfing candle break higher here would do a lot in terms of long-term sentiment, near-term, in order for us to look to those current highs we saw here just through the latter part of October as our first initial target to the upside. Get above that, then we can look towards the monthly fib on top of that, which is another 500 odd pips to the upside. So more than enough in the tank once we get above this current support and resistance level. We have everything in our favor here. Blue arrow candles, the RMO is above, and the OSMO indicator as well. And I also plotted the RSI, which is also clearly telling us that. You can see that the actual indicator box over here is primarily telling me I should be looking for buying opportunities. We do have a bit of negativity on my weekly chart, but as you quite clearly see here, we are testing a current resistance level. So that's going to be primarily the reason why we're not seeing everything falling in place on this particular time frame, because we are testing a weekly resistance level. So break above here, then we should be looking for opportunities until, well, going into this Friday afternoon. On to sterling, as I mentioned to you, very important day today in terms of the estimate, second estimate GDP quarter-on-quarter figures for the UK market. We've seen a lot of growth, a lot of unemployment figures have come out even better. We've seen a lot of employments. We've had the last employment figure has seen the UK market adding 60,000 new jobs, which are not short-term jobs. They are long-term jobs, which is fantastic. I was just listening into Carney's inflation report meeting yesterday, and he was quite bullish on the fact that things are looking quite healthy for the UK market for the foreseeable future. So let's have a look and see if the quarter-on-quarter GDP estimates are bang on, and they're expecting a 0.8% change compared to the previous months. But overall, we've seen a 1% growth over the last month, over the last year, in fact. So very good. In fact, Carney did mention that we are the fastest growing economy in the UK as of now. If you took everything into consideration, UK is growing quickest compared to every other first world country. So that's very impressive. Long may continue. However, on the chart, you can quite clearly see it's showing under a different scenario. We have had price trading at the same level on a number of occasions, including September, October, and now November. You can see a couple of days ago we had a bearish engulfing candle, almost an evening star formation at the same level. However, yesterday's candle finding support on a intraday 23.6 fib retracement level. If you take the current low to the current high, the 23.6 has been a prior resistance level, and yesterday actually helping price out in terms of a new support level, and price is now rallied higher. You can see on the Asian session, price is attempting the new or the prior highs as we speak, and you can see the weekly fib has really been the one to be aware of at this time. So got to see a genuine break above that. Will the estimated GDP quarter figures actually prove to be the doing of that breakout? You can see the monthly fib is above the weekly and quite close, so we have a genuine resistance level here. There is 155 pips between the weekly and the monthly, so we can at least, if the GDP figures come out and we see a nice break higher and a slight consolidation, and then that momentum to drive higher, we could very well catch some of that momentum into the monthly fib. But take it all off the table when we get to 38, because we're likely to see some sort of pullback at that level. Indicator box very much telling us we should be looking for upside, and RSI, as we've been in this consolidative range, you can see each time price has tempted the prior high, the RSI has dropped. So we've seen a clear divergence occurring as we've headed into this psychological resistance level, monthly resistance. However, this time around, you can see the RSI has breached. If this third attempt was a very negative one, well, a one with no true sentiment behind it, we would have seen the RSI trading even lower than the 50% retrace, 50% line here. In line with this, you can see this attempt here bullish into the prior resistance level, and RSI trading a lot lower than the previous one, so telling not a lot of momentum in this candle. However, near term we are seeing momentum moving through, so we want to see RSI does plot sentiment already. So if it's above 50 or below 50, that's what it's telling you, it's positive or negative. Here it is, the foremost thing, it is above the 50% rate, so it is positive. However, we've just got to be well aware that we are seeing a resistance level high third attempt, so got to see a genuine break above here. If we don't, then we're likely to see a major pullback, and that's more likely to be back towards his weekly fibs below, and where price is trading to that level, you're looking in excess of 284 pips and change. So here, wait for the news to come out this morning at 9:30 GMT, see how the market actually reflects on that news, and then trade the outcome. US dollar Swiss franc, we are seeing the totally opposite. If the euro is rallying, then you should see the US dollar falling, and you can quite clearly see the yen seems to be more red than blue. However, we are seeing a bit of blue intraday. Primarily we want to see the blue on the R-squared to confirm that this is genuine negative sentiment. We are seeing a couple of time frames here where price isn't just really moving with price sentiment, and we've got to be well aware of that. Near term, you can see price rallied recently to a current high and now has subsequently pulled back. So we can look at particularly, if I can just move that out the way, let's grab this and change that so we can look at potential pullbacks. Daily, you can see that the 50% retracement on our daily now has seen 1, 2, 3, 4 consecutive days of support. So our daily, everything's looking negative. We have a red arrow, red candles, RMO below, OSMO is below, and dark and bright red, and the RSI is below 50%. However, we have a support level. We haven't seen a new low, and we've got to see a new low. Yesterday's bearish engulfing candle did not close lower than the prior bullish engulfing. So we have a tweezer top here, however, not one with sentiment, because the actual candle has closed smack bang with the prior lows. So hence the reason why we have a 4-day low or support level. So we drop down to our 4-hour time frame. We have to see this 50% retracement level here being breached on the 4-hour. Then look for the hourly candle to confirm that sentiment. Then we will be making lower swings, and if we are seeing lower swings, then we can look towards the prior support or the prior fib levels, which is a healthy 40 pips away, daily back down to the other one, which is another 55. So there's more than 100, maybe 250 pips of profit to our weekly, which is down the bottom here. So you take the current level to that level, you're looking in excess of 200 pips, which is exactly what I've just mentioned. So here, got to be patient, wait for the confirmation break on the 4-hour, and then trade the outcome. Okay, guys. US dollar Japanese yen here, very, very bullish indeed. One or two areas where we don't see confirmation, or where price or on the time frames we're not seeing a true correlation. However, on the daily, I wanted to bring it to your attention. We have had 1, 2, 3, 4, 5 consecutive days of resistance or consolidation at a point, which is the 101, 26, and 40. And I did mention on my video analysis that these were exhaustion candles. You can see a lot more selling contracts were taken at the end of the day, so a lot more selling bias even though we were in upside, however, the only thing was going to actually cancel this selling bias over here, this consolidation selling bias, was a bullish engulfing candle. And on the night, or on the Asian session last night, we are seeing a lot of driving through, a nice drive through this. So we want this bullish engulfing candle to close, so we would have to wait till the 10:30 close this evening, GMT. Then if that is generally moving with support and finding a new push on, then we can look towards those weekly highs, which was way up here, which is roughly 200 pips from where we are trading right now. So very, very important. We do need to see a bullish engulfing candle, because the past 4 days, in fact, have been very, very indecisive. And if they are indecisive, then we don't know where the genuine price is likely to go to. And if we don't know where price is going to, and if you're trading, then you are speculating. Rather wait for the market to confirm direction, and then we trade the outcome. Here, indecision, bullish engulfing, then price moved higher. It's the same over here. Indecision candles, we need to see a nice bullish engulfing candle, and then we trade to the upside. Same got to occur over here. We have to see a bullish engulfing. If we do see price moving higher and then consolidating back again down the bottom over here, this is going to start looking very, very negative. You can see the Osmo indicator over here for the last couple of days has gone dark green. RSI is still above the 50% level. However, as you can quite clearly see, as we've gone through this consolidation here, RSI has failed to make new highs, and we are trading quite close to the 70% level, which tells us we are looking at overbought scenarios, and there could be a potential for change in market sentiment. However, everything on the daily is looking positive in terms of blue arrow, blue candles, all the moving average below price. RMO is above, Osmo is above, but clearly consolidating, because we are consolidative on our daily time frames. We do need to see a bullish engulfing candle to confirm sentiment still wants to look long. As it looks at the moment now, everything does look like it should be moving longer. We just need a confirmation from the market. If we don't get one, then we should start to see negativity starting to outplay on our intraday, and then we could see price falling back to the current swing lows that we just come from. Ideally, this 50% monthly fib. Okay, so very, very important. Let the market dictate to us where should like it to go to, and then we'll trade the outcome. So that's it for today, guys. Short and sweet. Please, if you are using this template or any of the Serene Education templates, to please back it up with sound money management rules. Please follow the principles, or the actual principles of the strategy. You have to abide by them. Very mechanical in your approach. If you abide by them very mechanical, you're less likely to make far fewer mistakes. And that's exactly what we want to do as a trader. We don't want to make mistakes just because we are speculating. We want to trade direction because it is genuinely going in that direction. And if we have something that can actually help us, that's going to make our life a lot easier. So please, please follow the rules of the template. Very, very important. Other than that, please be aware of any market news today, including GDP this morning, figures for sterling. Very, very important. UK market, that GDP quarter-on-quarter figure is going to be very, very important for price action. We are at a resistance level. If we do get a positive outcome, we like to see that 2-month resistance level being breached. However, we do see a negative outcome, there's more likely for price then to retrace quite aggressively, and that will concur with the prior resistance level pullbacks which we saw over the past couple of months at the same level. This afternoon we also have a lot of news out for the US market. If we do see the news of this morning coming out positive, and then we have unfavorable news for the US market, that in turn will then kick on that second extension up. If not, then we could see a lot of consolidation this afternoon, or a lot of wickiness as the figures come out. They're expecting a better core durable good and good month figure from a negative 0.2% to a positive 0.5%, which is almost a full 1% change. The unemployment claims, however, they're expecting a lot more people to claim for unemployment, which is not really good. We want to see less people claiming for unemployment, so that could really put a stick in the spokes if that is generally the case. So be vigilant, be aware of it, and apply to your charts. I'm going to leave you with that. Have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.